Well, thanks for having me. The operating margin miss is the biggest headwind here. Really led by all three segments. They missed operating margin across all three segments: the U.S., international, and channel development. And on top of that, they really missed the international comp, which shouldn't be overly surprising given the choppiness we've seen internationally, particularly around China.
And so what are the key things on the call? I mean, could they offset this with a positive outlook, or is this a major negative turning point, which is making you consider your buy rating?
Well, I was not surprised. I had previewed Starbucks. One of the main points was that there's risk to the operating margin estimate for the year. Essentially, it's more of a valuation play now, right? I mean, we're trading at below the 27 times historical forward PE multiple. We just need to see what that number is going to be in terms of guidance for operating margin for this year, and to what extent they can get close to 18% next year that they had targeted previously. The stock was already off, and I don't think it's that surprising that this is the kind of quarter that we just had. We just didn't get guidance within the press release. So once we get guidance, I feel like people will have a foundation on which to build from in terms of whether or not they want stock. But given the valuation, as long as we have that visibility around what the new margin target is, I think people will come back to this name.
What about China, Nick? You mentioned that was expected. Same-store sales there falling 14%. Do they have any visibility into when that business could come back, given the really strict COVID policies in that country?
I think the question is whether it's really due to COVID or if there's a broader slowdown in China going on. I think that's one of the key takeaways we need from this call, from the earnings call. And so that's probably one of the major questions we need to address today is, when do they think China turns around? It's supposed to be half of their top line growth going forward, right? China is. And so, to what extent is that still realistic?